Welcome back to Stock Tricks with Nick. For today's video, a tale of two cars. Over the last 2 days, two car-related stocks made major moves. The stock CAR, which is Avis Budget, was up 21% in just 2 trading days, while CARG, Car Gurus, was down 14%. Both presented high probability trades, one from the long side and one from the short side. In today's video, we'll break down each of the stock's history, how we added probability to the trade, along with the entry points. This video is sponsored by MarketSmith, which is the trading platform that we're going to be using to break down the stocks. If you find this video valuable, please do me a huge favor and leave a like and subscribe to my channel, where I do trading videos like this, along with a watch list every Sunday morning. So let's jump to MarketSmith to see how we could have traded each of these stocks. Let's start with Avis Budget, CAR, because it's a trade I actually made. Group strength, it's 38th out of 197. It's in leisure services. So that is a group strength rating of an A-. That adds a little bit of probability to our trade on the long side. It has an accumulation distribution rating of B+, meaning more of the heavy volume days come on up days versus down days. The stock is being accumulated versus distributed. It's got an overall composite rating of 92 and an individual relative strength of 99, the highest MarketSmith gives. Taking a look at the fundamentals, you can see that this was a turnaround situation. We had negative earnings per share, and then we improved by 205%, 850%, and then over 1,000% year over year for the last 4 quarters. And then sales went from minus 22 to plus 212, plus 96, plus 90. And after-tax profit margins went from minus 2 to plus 18, plus 23, and then plus 16%. So the fundamentals are strong. That's stacking another layer of probability onto the trade on the long side. We already said it was an A- group strength rating, but taking a look inside the group shows that there's 43 stocks that make up the group. CAR is the 4th strongest on earnings per share, number 1 on relative strength, number 8 on accumulation distribution, and number 3 out of 43 overall composite. So it's a strong stock in a strong group with strong fundamentals. You can see the probability adding up. Another thing that you want to look at is the stock's history. Does it have the ability to make very quick, very powerful moves in a short amount of time? You can see it had a nice run up through here and then also had a 185% breakout on an earnings day. This type of action, this trending action and a breakout action shows me that when this stock does get going, it has the ability to really break out. That adds not probability to the stock, not probability that the stock will break out, but if it is going to break out, the upside potential versus our downside potential is going to be in our favor. And finally, we get to the technical analysis. Looking at this chart, we did have this very heavy breakout, but of course this got extended. And when the market started pulling back and rolling over, this went from 545 on this day. It actually closed pretty low in the range at 355. But from there, it moved down all the way to 187, 141 as the market was putting in lower lows. But then it actually put in a higher low here while the market pushed lower and actually got going up to this $300 range once market pressure lifted on the S&P 500, you can see here. So we went from 141 to 300, basically a 100% move there, but right at this $300 range is where you see some heavy trading on the left side of this chart. So it makes sense that after a very strong 100% move, that the stock is going to digest those gains. Similar to when we did break from 85 all the way to 545 at the peak, we digested those gains. Not as drastic as this first breakout, but it's still a 100% move. And then we pull back to 236 there. From here, what I like is the market starts pulling back. We never test the 50-day moving average on this pullback. Sure, we come in, we try to push higher, and we undercut the low, shaking out the weaker hands. We have a couple closes under this 21, this pink 21-day EMA, but we never test the 50-day moving average. That shows good relative strength compared to the market because you can see QQQs were under the 50-day moving average. This never tested that 50-day. After here, we do eventually get over the 21 EMA on April 11th, and that's as the market's pulling back down, it's actually jumping ahead a little bit of the market. From there, we had a couple closes back above the 8-day, back above the 21 EMA, and it formed this 2-day pivot. And I really like this candle on the 14th because the high of this candle breaks over the previous 2 days highs. And that could have been, if you were impatient, a potential entry point. But right when that happens, we pull back down and we stay in the base. We don't really shake out under the lows. So potentially if you got in on this day, you wouldn't have been shaken out. But come Monday, so that was Thursday, we had a shortened trading week last week. Come Monday, we have this inside candle on very, very light volume. You can see volume drying up here as price actioning is tightening, as we were back over all the key moving averages, And right once we get one day where the indexes move up on Tuesday, this breaks out over the previous day's high. So I actually entered this with a break over Monday's high. Monday's high was 271.99, call it 272. I did cheat in a little bit when it broke over 270. 15-minute candle here, you can see we built, here was the high from the previous day at 271.99. I got in basically right at the open. The first 15 minutes, we broke through 270. That was my entry point at 270. The trade worked immediately. The best trades typically work immediately. You see volume come in. You don't see the stock checking back below your entry point. We get a nice push out, and then we just flatten out throughout the day. A little bit of a pullback, but then we close strong right at the end of the day. Again, that was like a 94% closing range. The next day we get that gap up. We press higher into this 320 area. A little bit more fluctuations towards the end of the day, but still going back to a daily chart, we still closed in the 84th percentile. This was on a day where the NASDAQ was down, S&P 500 was flat, and this was a great closing range, a very quick move, about a 21% move from the previous day's close in just 2 trading days. So that's CAR, great trade on the long side. Let's review all the probabilities that we stacked in our favor. We had a strong group, leisure services, 38th strongest out of 197, A- group strength rating. We had a strong overall composite rating of 92, a strong individual relative strength rating of 99, strong fundamentals. Within the strong group, we were number 1 on relative strength, number 3 composite overall. This was showing relative strength compared to the S&P 500 that did dip below the 50-day moving average. This never dipped below the 50-day moving average. And the stock's history showed that it had the ability to make these very powerful, very quick moves. So the risk reward was also in our favor. We stacked all those probabilities on our side, and we take the trade. This could have easily just reversed lower, shaken me out, 2% loss, something like that. But if we take trades like this, where we stack as much probability on our side as possible, and we manage the downside risk with 2%, 3%, 4% stops, these 18% moves in 2 trading days are going to cover many, many losses. That way, we don't have to have a winning percentage of 50-50 to be profitable in the market. We only need to win maybe 30%, 40% of the trades if we really skew the risk reward like this in our favor. So that's an overview of CAR. Now let's go to the other side of the coin, CARG, Car Gurus. So this was a good shorting opportunity. This is an internet content, 153 out of 197. So that's a D+ group strength rating. Again, other side of the coin, very weak group. It has an accumulation distribution rating of D+, meaning heavier volume selling days versus heavy volume up days, or light volume up days. It does have a composite rating of 87. That's on the higher side. Relative strength rating of 92, also on the higher side. Fundamentals are relatively strong. Earnings per share were up 74, 116, but then +3, +34. Sales +9, +130, +51, +124. Each of the last 4 quarters, year over year. After-tax profit margins were improving, 23%, 22%, 21%, and 15%. So you're seeing a lot of improvements, but at decelerating rates. This actually was a stock that was on my list on the long side for a while, and I did trade it through this high volume close after they reported earnings on, let's see, what day was this? February 25th. I traded it from this $45 range up to the 50 and made a little bit of coin there. But then you could see the S&P 500 rolling over. This went from 50 all the way down to 35, breaking under the 8 and 21 EMAs. Never broke under the 50-day just yet here, but it did show from 50, a nice move from 50, but then back to 35. That is, let's see, about a 30% decline, a little bit more than 30% decline in just a couple trading days here. So typically, if you see a really strong breakout on heavy volume, you will see continuation higher. The fact that it immediately rolled over the second day or the third day and then broke under that high volume close area of 46, let's see, what was the close? 46.44. The fact that that didn't hold support and more buyers didn't step in, that is your first warning sign that this might not be the greatest long setup. Even though we had good earnings and it was in a had decent individual relative strength. Let's go into the group. Within the group, again, this is a decent stock within this group, but it's an overall weak group, D+ group strength rating. It's 5th strongest on earnings per share, 4th on relative strength, number 1 overall composite. So ideally, we stack a little bit more probability on the other side. We're saying this is a weaker stock in a weak group. This is a relatively strong stock in a weak group, but once we go through the technicals, you'll see why we could stack some probability on our side. So we already saw the first yellow flag here, not being able to support this breakout. Once the market rolled over, this immediately dropped from 50 to, what was the low here? Around 35.50. From there, we did get some choppiness. It looked like it was flagging out relatively nicely, but it was really the last 4 trading days or so that switched the story around. So going into this, we had a positive day on April 11th where we pulled back. The market was pulling back in. We pulled back to the 50-day moving average, and we bounced exactly at that area. So the 50-day was showing, hey, there's buyers stepping in to support this area. That was a good sign for the long side, and at this point, I was still looking at the stock on the long side as potential trade. We got a nice move up, a 1 or 2 days where the market kind of had a relief day, bounced a little bit. It went back above the 8 and the 21 EMAs, closing above that. Higher highs, higher lows on the 14th, which was last Thursday. Again, shortened trading day, so that was the end of the week. So going through my weekend routine, this was on my watch list of, hey, the stock's showing great relative strength. It's not in a very strong group, but it does have maybe potential power to push through if this market pressure lifts. So going into the week, I was thinking, okay, maybe a potential long setup here. And then Monday comes around. Monday, market action was bad. It makes sense that this was down 3.3%, closing back under the 8-day and the 21 EMAs. This kind of action basically took it off my long setup because there's a nice pivot here around $43 on the long side, but the market would have to really turn around to get going. So I didn't have this as a focused stock on the long side going into Tuesday's action. Tuesday, though, set this up perfectly as a potential short. While the market had that relief rally, remember the NASDAQ was up 2.2%, S&P 500 was up about 1.4%. You see the S&P 500 lifting here a little bit on the upper side. This actually pushed lower, had lower highs, lower lows, found resistance right at that declining now 8 and 21 EMAs, closed under the 50-day moving average. So when it provided support on the 11th, buyer stepped in. This failed support at the 50-day. We closed under the 50-day moving average, and we also closed under a nice round number of $40. Remember, I had a bias coming into the week as this is a good potential long setup. Monday's action, the market was bad, so the fact that this came back under the 21 and 8, not very important. But Tuesday, when the market rallied and rallied strong, this was down another 3.5%, broke under that 50-day moving average, closed under a nice round number 40. Now you have to switch. This is a great short opportunity if we see the market pulling back the next day. And of course, that's exactly what you see here. We do attempt to run over 40 at the beginning. Remember, the market's opened up today on Wednesday, April 20th. The market's opened up. This opened up above 40, or we got going over 40. And then once you fail 40, that is your perfect short entry point, because then you can manage risk against that 50-day moving average, which is at 40.36. So you have less than 1% stop to your 50-day. Maybe you split your stop, do half above your 50-day, half above the 21-day EMA, which was at the time, 41.23. So about a 3% stop there. So a 1% stop at the 50-day, a 3% stop at the 21-day. You have your risk managed. You have a stock that is showing relative weakness. It's in a weak group, and it had shown you that when the market rolls over, this can roll over quick as well. It breaks 40, that's your potential short entry, and right away, once it broke 40, switching to a 15-minute chart, it broke under 40, that same the second 15 minutes. Let's switch to a 5-minute so we see this a little bit clearer. Here's your first 5 minutes, you push higher and then fail at 40 there. And this is another trade that immediately starts working for you. It never comes back to test 40. Sellers are stepping in, pressing it lower, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs throughout the day. So on the flip side, instead of a long setup, we came into the week with a long bias, but the price action was telling us something different on Tuesday. So we switched to a potential short, and with the break under $40, that was your entry point. And now if you're still in the stock, you've probably taken some profit. This does have support around the $35 and the 200-day simple moving average coming up. So you have to think risk reward at where you're at right now. You have another 5.7% from the close today to the 200-day moving average. Is that worth the stock potentially coming back and hitting your stop at 40? For me, no, I would have taken some profit into the close or probably even a little bit earlier, but a nice 9.4% down day and a great way to manage risk on CARG for a short option. And that's going to be the tale of two cars, CAR and CARG. One was a great long setup that we stacked probabilities in our favor to go long. One was a great short setup that we stacked probabilities and managed our risk on the downside. If you guys enjoyed this video, please leave a like. I make trading videos like this along with a watch list video every Sunday morning. You guys can also follow me on other platforms such as StockTwits, Twitter, TikTok, and Instagram. And a big thanks to MarketSmith for sponsoring this video. If you enjoyed the platform, there's a link in the description below where you guys can try it out for 3 weeks for just $20. Have a great rest of your week and your weekend, and I'll see you guys on Sunday.